All right, everyone. Good morning. My name is Marko Kairjak. I'm a partner at Ellex law firm. I'm heading the fintech division at this law firm. I'm very happy to welcome you all, knowing the amount of the interest and the participants in this seminar regarding the new regulatory framework getting realized in 1 or 2 years, stemming from Brussels. Providing a umbrella for the digital asset market. What is digital asset or crypto asset is obviously a new notion of the market. I think there are many new definitions that are going to be used during this seminar as well, marking the use of such definitions in the future as well. By that, I'm very happy that most likely this might be one of the first such of a kind seminars. Why one of the first? Obviously, there's a special interest from the Estonian side. We, as a jurisdiction, were involved in the development of crypto assets usage already from the very early stages. Many know that we most likely were very involved in the first stage ICO boom or mini boom up to 8 to 10 years ago, where at some point we might have been together with Switzerland as one of the leading jurisdictions for the initial coin offerings. In terms of regulatory approach, nevertheless, even after 8 years of the interesting times, we do not possess any legislative approach to offering digital assets initially. What we operate is with a handful of supervisory Q&As or soft law approaches, but no pinpoint rules or regulations still exist. The situation is a bit different. What happened maybe 5 or 6 years ago, Estonia as a jurisdiction got very involved also in the market of crypto asset wallet or exchange services. We were the first or one of the first that deployed the possibility to foresee a license regime, which went into sky-high territories, meaning that we at some point had many license holders. What happened afterwards, the laxing of the rules, then the decrease of requirements is obviously a very interesting chapter in a regulatory approach from Estonian side as well. And most likely at some point will be subject to many interesting analysis. But what is important is that obviously, thanks to that, we deploy a relatively solid local crypto asset market. Also, the technology provider micro market is evident. And secondly, this means that obviously from this side in Tallinn, in Estonia, and in entirety, we were very interested in what was going on in Brussels regarding the new regulatory regime. We were keen on looking at what will be the structure of the new regulation, what kind of other initiatives there were going on, and also very interested on the requirements that were going to be set, plus the ambit and the scope. Here we are. I'm very happy to have a webinar in a situation where we actually do not know exactly what the subject is, meaning that as a principle, MiCAR as a regulation is not adopted yet. As a principle, MiCAR will be forming a set of rules together with other legislative initiatives such as DORA and so on. But this is still unclear what is the actual time frame of everything accompanied to this as well. In this kind of haze of regulatory unclarity, nevertheless, we have put together a very good panel of speakers. We start with Siim, Tammer, the management board member of EFSA, who will provide the regulatory insight into the future from the supervisory approach. Please take into account that part of the haziness is that EFSA, Estonian Financial Supervision Authority, has never had any direct supervisory obligation regarding the crypto asset provision until now. It was done and it is being done based on the existing regime by the Financial Intelligence Unit. Afterwards, we have the overview of the regulation itself. We will try to give you a key regulatory takeaways. My colleague Anneli Krunks from Ellex office in Tallinn will provide you a kind of a quick introduction of the main principles. We carry on with Joosep Vahtras from Chainalysis. Thank you for joining with the travel rules, with the overview of the travel rule and AML requirements, and very kind of a practical view. And we wrap up with the astonishing overview of the background and the story behind MiCAR and all the legislative initiatives from straight from Brussels in terms of information with Janet Ho of Chainalysis. And then we try to wrap up today around 12:10. Organization-wise, we have left a couple of minutes after each presentation for Q&As. For sure, I will have many questions, but then I will try to avoid me asking all the questions. I welcome everyone to ask a couple of questions if possible. There's a possibility to send Q&A questions that I will see online. And I think let's take it from there. First, I will start with Siim Tammer of Estonian Financial Supervision Authority to provide an intro into the supervisory approach to MiCAR and whatever will be brought with it. So many thanks for joining us. Hi, Siim, and looking forward. All right.
Thank you, Marko. Warm Friday mornings and welcome from my side as well. My name is Siim Tammer. I am the member of the board of Financial Supervision and the Resolution Authority in Estonia. And I am also a PhD student in Tartu University in the field of financial law. To be clear, I mean, all the thoughts expressed today are mine. They are not the policies or decisions of the Financial Supervision and the Resolution Authority, nor the university. So, saying that, I will share today with you some regulatory background thoughts in relation with the possible supervision over the crypto assets. I also will share my thoughts about the changes MiCAR regulation will definitely bring to the market. The focus is Estonian market, and as I see from the participants, most of the participants I presume are from the Estonian market as well. But for the start, I mean, it is not something new that developments from economy or technology, in this case related to ledger technology, will bring the need of more specific EU-wide harmonized regulations. Especially in the situation where some of the crypto assets already fall in the scope of the existing EU financial regulation. It is the Directive 2014/65, and the others are not regulated. I mean, the market is still modest in the size compared to other areas in the financial supervision, but I mean, it's growing quite fast, and I share the overall view to harmonize the framework at EU level to provide specific rules for crypto assets and related activities and services, and to clarify the applicable legal framework, what is now done by the possible MiCAR regulation. I will start with my understanding related to the background of the supervision over the crypto assets providers. I mean, it's a pity that the MiCAR regulation has not been published yet. I understand that Marko has had the aim that it will be the first conference related to MiCAR regulation that is almost established, but now it hasn't been. The last version I found is from October 2022, and it can be found from the Council of EU Web. From the realistic perspective, I think not much will be changed in that text, but you never know. The topic and the sector, I mean, it is more than hot anyhow. So hopefully it will be the last one, but I'm not so sure. Estonian Financial Supervision and Resolution Authority so far has had a minimal supervisory exposure related to crypto assets. The supervision before MiCAR regulation in that field is on the firm hands of our financial intelligence unit. Few scope is narrower than they plan to regulate the field with MiCAR regulation. Few registers the virtual asset providers. As I have understood, mainly the most popular is the wallet and exchange service providers. They are registering. For the last years, few has had challenges related to these virtual asset providers. The numbers of registered entities were few years ago as high almost as, it was almost 2,000 registrations. My question is, why so much? Considering the fact that most of the countries in EU, the number was far less than maybe 20. But my opinion, there is some issues why the number was so high. First of all, I think Estonia had and has a good IT and innovation reputation. To provide innovation-based solutions, Estonia, I think, is the best place. Secondly, I think the registration process was very easy. Not much of requirements to fulfill. The overall cost of the registration was low, but to win, you had quite a lot because you got the registration, you are the registered entity. And thirdly, to be now transparent, there almost wasn't supervision over the entities who got the registration. So almost an ideal place to have that kind of a registration. But there is a little bit more. The few was then one of the units of Estonian police. So you got the registration from the few who is a part of Estonian police. And in practice, what it was, I have seen different kind of a market-related issues as well. There has been marketing issues that we are now licensed by the Estonian police and few, and even I have seen that most of the marketing is based that the registration is somehow the same as giving the license, but there is a huge difference. Then you have the license or you have the registration-based registration. But those are the pros or the issues that why the number was so high in few years ago. As a financial regulators now, we have in previous years given strong opinions related to that kind of registration-based market, because as a regulators we have seen different kind of red flags related to that kind of registration. I think the AML is definitely one of the highest questions we have raised of that market. And the Parliament has changed the regulation related to the registrations of virtual asset providers. Requirements has significantly increased over the years. The head of FIU also had an idea that all the licenses must be stopped, and new assessment per entity must be done. It hasn't not gone so far, but a lot of requirements has been enforced. Let's say own funds requirements, business plan requirements, internal audit, and so on. The regulation we have today has made many steps, I think, towards the aim of the MiCAR regulation. And the number of the registrations is now around 160. So I mean, there has been already a huge impact to our market and our registration-based market in that field. So maybe that's a little bit about this background of the as I see as the supervisor in that field. I will now make the jump and share some thoughts related to the possible ways that will change after the MiCAR regulation. I think one of the biggest questions we are facing in Estonia is that who will be the competent authority? Options on the table are few, or us financial regulators. I share the view that there are pros and cons on both models. One hand, the MiCAR regulation is setting the regulatory scheme quite similar as it is with the other persons who are under the financial regulation. But the other hand, few has today all the competence and the practical practice related to the sector and made hard work with the market during the last years. Few months before, I would have added that main risk with that sector is related with AML, and so that's one of the issues that would towards the regulation. But today I think the crypto asset sector has revealed that there are multiple risks involved, and maybe it's not only AML issues. But overall, I leave that decision on the hands of the representatives of the people, our parliament, and as a regulator, I hope that the clarification will come soon during hopefully the next year. Then, because you have to set up all the supervisory mechanisms before the MiCA is coming in place. The second important issue relates what will happen with the market. I mean, is the regulation too heavy? Are the standards too high? How to classify the crypto asset in practice? I mean, we all know it can be in a legal way, but in practice. And to be quite frank, I don't know the answer, but I know that if the answer is yes, related to this, that related to the heaviness of the regulation, then a lot of businesses involved must find another activities, and a considerable amount of market could go under the floor. I mean, providing the services without a license, or they can use the technology to find, loopholes in the regulation, because they are not suitable to have the license. I am looking curiously towards ESAs, EBA, ESMA, JOPA, who will have the mandate to promote a common approach on the classification of the crypto assets. According to the model of supervision competent authorities should be able to request opinions from ESAs on the classification of the crypto assets. I think the aim is reasonable. That kind of unified approach, will it work? We will see. But but as a practitioner, I mean, even in more older or more comfortable sectors in financial market, there are still challenges related to EU-wide unification. I mean, but let's see, is it approachable in that case? And thirdly, I can share the practical views related to to take the new framework to establish the new sector and to be added on the supervision of Estonian financial supervision. In 2015, the Creditors and Credit Intermediaries Act was passed, and at the latest of 2016, all the creditors and the intermediaries must have their license, or they should, and if they didn't have the license, they were not allowed to provide their services. I will skip the story behind the need for that kind of regulation, just concluding that there was a need for consumer protection. Without supervision, the sector was heavily inclined to the service providers. So, but going back to the creditors and credit intermediaries, our projection was and showed that the market was among 300, 400 participants in the market. The license was granted under 60 entities. And I guess the real number of the market participants were even higher. So 10% or less who were on the market got the license. And I will provide some maybe some key takeaways from that practice with the creditors. It is fact that around 90% of the entities had to stop their activities as creditors. I mean, and now going to the MiCAR regulation, it definitely will bring a lot of weight to crypto asset field. The sector will definitely get some stress. I mean, that's maybe one of the aims as well of the regulation to do that kind of work as well. But the overall question is, does it help the investors? Does it help the clients? Maybe. The risk is that so stiff framework may bring opposite results to the investors or clients. Supervision and also to comply with a new regulation, it's not the cheapest one, and it will definitely have the impact on the price of the services provided as well. So that's first of the takeaways. The second one is that the assessment period, looking now as a regulator, was a headache. I mean, mainly the entities fall related with the issues with the fit and proper in the creditor side. The owners, the management was not suitable. The key fields now, if we are going to make a regulation, are related with the capital, suitability issues, transparent household issues, protection of investors, and maybe I think maybe the most important related to that sector is to explain the finance of the business to the conservative regulators. I mean, that's maybe one of the key elements in that kind of a new sector. But one of the challenges is the suitability assessment, I think, in this field as well. And the question is the standard the same as with the credit institutions, with the payment services? I mean, the bar is quite high. Is it something, I mean, which will be problematic from the entity side? That's, I think, something which needs to be thought if the regulation is in place, and how to do that kind of assessments, because the model maybe is a little bit different and the participants are maybe a little bit different. And thirdly, the business may move in the fields that are not regulated or go under the floor, as I spoke before. For example, the regulation of creditors is a little bit kicking back now in Estonia. We are struggling with savings and loan associations. There are in place different schemes to give credit without a license through the associations. I mean, going back now to the crypto assets regulation, the technology is changing so fast, and the risk that the players of the market find the loopholes, I mean, that's quite high. So those were my brief views from this as a regulator, from the regulatory perspective. As you see, I mean, we are quite just starting the steps, and it's not so clear who will be the authority to regulate that field. If you have any questions, feel free to ask, but I know that all the detailed issues related to MiCAR regulation will be revealed by the other performance. So thank you.
All right, many thanks, Siim. I have one additional issue that would be nice to address. I actually wanted to ask the ESA question anyway, meaning that what's your take on the ESA's getting involved, maybe trying to get a level playing field as well. Well, the MiCA is quite a lot concerned with the service providers, but then MiCA should be the definitive regulatory regime for raising any capital from true instruments such as crypto assets or digital assets as well. Obviously, there will be an issue who will be the regulator, who will be the supervisor for that as well. But as far as the raising of assets will be concerned, then there will not be the similar involvement of the state or the regulatory supervision as well. But at the same time, what will happen is that we now have a framework how to raise assets through crypto assets or digital assets, meaning that it is on the playing field of raising assets. Now it's a kind of regulated player who cannot be in any way taken as a secondary regime. What's your take on this? Next will be what will you do with a MiFID license holder who will claim that they are raising capital through issue of digital assets?
Thank you. I mean, that's fair and good question. I mean, maybe the honest answer is I haven't thought in a way how this kind of a horizontal rights will be addressed during the enforcement of the MiCAR regulation. I think that depends definitely about the regulation of the scope of the MiCAR regulation as well. If that all is in solid basis and clear, I mean, then that kind of a discussions how this kind of horizontal regimes are impacting each other, I think will follow. So I mean, thank you, Marko, and maybe that's all about that kind of a question, and that's a very good point, and I think we have to look it into after the MiCA is in place.
All right. Yeah. My idea was to stress this. We Estonians are very kind of the service provider related because we are so well off with our experience with the registration and the licenses. We are only thinking about this and mainly waiting for the MiCA to come into force because we wanted to have clarity what will happen in the future as well. But then, yeah, we cannot just leave aside that maybe for the rest of Europe, MiCA was the key set of rules for the issuance of capital through digital asset, through the instrument of digital assets. All right. I think we are well off with our schedule. Thank you, Siim. I would like to say hope to see you in the future webinars regarding the crypto assets, but we don't know yet whether EFSA will be the authority that will take it over. We'll see. But nevertheless, many thanks for the time. And then I will hand on the virtual microphone to my colleague Anneli Krunks, who will then look into the MiCA substantive issues as well. So Anneli, you have the floor.
Hi, good morning. I will try to share my screen as well. Just a moment. Can you see my screen, Marko? Maybe you can tell me.
No, I see a black screen, basically. I see you're sharing the workshop video room itself. I think you have to somehow upload the presentation.
Just a moment.
Looks brilliant. All right. You can try to put it on full screen, maybe then now it's not on full screen. Maybe let's see whether it works. Doesn't seem to work, but then I think we can start from there. Just I know if you I think it's kind of large enough for everyone to see. Anneli, I think you're muted, so could you just unmute yourself?
Yeah.
All right. Okay.
Okay, so welcome from the Tallinn office. My name is Anneli Krunks. I'm a senior associate in Ellex and mainly dealing with the fintech sector and crypto assets. I will try to give an overview of the main aspects of the MiCAR regulation, but considering the length of the text, of course, we cannot go really into detail, but hopefully everyone who are listening to this webinar are going to get some insights for themselves from this regulation. Previously, Siim and Marko both were setting the tone what has been happening in the virtual currency regulation. Then from the MiCAR side, I would say what is really important is that until now we have had virtual currencies regulated, but this has been on a directive level, meaning that every member state has a bit different regulation within. And when we have, for example, in Estonia or in Germany, quite stiff regulation, I would say, compared to some other member states, then it's the regulatory scene is actually quite fragmented. The other aspect is that even the big crypto asset service providers are going from one country to another country to get the license in there, which means that you have to do the registration and the authorization process through in every country, basically, if you want to provide your services there. And this is one of the I think the key aspects for the service providers that MiCAR regulation is bringing, that you don't have to do it in every country. To go into detail, I will start off with the crypto assets which are in scope of MiCAR, because whether you're issuing crypto assets or you're providing services, you have to understand whether the crypto assets you're dealing with are even in scope of MiCAR. So the MiCAR is dividing crypto assets into basically three categories. The first two of those are which we can call stable coins and a bit more specific. So for example, we start off with e-money tokens. Most of the stable coins right now are e-money tokens, and they're referencing their value to one official currency, whether it is euro or it is US dollars, but it is one official currency. We have, for example, USDT, USDC, and other stable coins as such. The second crypto asset class is asset reference tokens, which is not so common on the market right now as well, but there have been some discussions and there have been problems with such crypto assets previously. So this is most likely why the asset reference tokens have found its way to the MiCAR regulation. And in comparison with the e-money tokens, then asset reference tokens are referencing their value to more than one official currency or a combination of different asset, or there is a basket of assets behind this crypto asset. And the third one is a really comprehensive and trying to capture all the crypto assets type of definition, saying that all the digital representation of value or right, which could be more or less anything, and if it can be transferred and stored electronically, is crypto asset. It is the basis technology is either distributed ledger technology or something similar, but in any way the regulator has tried to capture as many crypto assets as possible, and this is what they have said as well, that their aim is, well, until now we had only virtual currencies in scope, but virtual currencies is really small part compared what MiCAR is trying to cover. So with the last definition of crypto assets, they're trying to cover as much as possible. But of course, some of the crypto assets are not in scope of MiCAR, and One of those is those crypto assets that are under the existing EU financial services regulation. And if we are currently analyzing different crypto assets, then there is always a question whether it falls under any existing financial services legislation. This is what MiCAR is bringing.
Anneli, would you double check your slides are not changing?
Okay.
I think we are seeing only once. Yeah, there you go. Everything is okay. I think it doesn't show the full screen, just like
Okay.
now it's the right one, number 4.
Okay, understood. I will not go on a full screen then.
Yeah, don't go. It doesn't work. It seems to not work. Okay.
Okay, I will go on from here. What MiCAR is saying really strictly is that if you're under a financial services legislation, then these kind of crypto assets are not within the scope of MiCAR, and they are planning to issue guidelines and technical standards in order to clear it up which crypto assets and based on what aspects should be then should go under the MiCAR regulation or under the existing regulations. And then there is another exemption that if the digital asset cannot be transferred, then it should not go under the MiCAR regulation. So, for example, if you're issuing a crypto asset yourself and accepting it yourself, then this would not go under MiCAR. What has been discussed quite heavily by the crypto enthusiasts is that whether the algorithmic stablecoins are within or out of scope of MiCAR regulation, because in the previous text, actually, it wasn't really clear. It was like discussed more that they're out of scope, but I wasn't so sure, because if they're under a definition of any of the crypto assets in MiCAR, then they should be included to the scope. And now the final text of MiCAR regulation is actually clearing it up, that it doesn't matter if you're using algorithmic systems or any other mechanism. It doesn't matter. It will go under the MiCAR scope and under the crypto asset definition if it is according to any of the definitions. So it doesn't matter what is the underlying mechanism of that. Another aspect which has been disputed greatly is whether the NFTs fall under the MiCAR regulation, because the NFT market has been booming for the last 2 to 3 years, and I think it will be impacting the NFT market quite a lot if the NFTs fall under MiCAR regulation. So in general, what the MiCAR regulation says in the main text is that unique and non-fungible crypto assets will be out of scope of MiCAR regulation. At the same time, when we go to the preamble part, EU regulators have now cleared it up that actually, if you're giving a fractional part of a non-fungible token or unique and non-fungible token, then it should be within the scope of MiCAR regulation. Also, if you're giving NFTs in a large series and collections, it should also be covered under the MiCAR regulation. But the MiCAR regulation is not defining what should be understood under fractional part or a large series or collection definition. What has been discussed between the lawyers is that the fractional part is a fractional ownership to a larger asset, whether it's some kind of artwork or something else, but it's a fractional ownership. What is a large series and collections? Because we have been seeing issuing of NFTs in a large series quite a lot. And it is discussed that if you're issuing a large number of NFTs, whatever then is a large number, this has to be discussed. Then only if you have like minor differences between the NFTs, they're differentiating from each other only to a small extent, then they actually should be covered also with the MiCAR regulation. Important with the NFTs is also whether the assets or right represented that they should also be unique and non-fungible, meaning that if the NFT, which is giving you underlying right, then these rights that you're giving to the NFT holder should also be different from each other, that they cannot be all similar. And important is also that the MiCAR regulation says that substance over form approach should be taken when the competent authorities are looking into whether any of the NFTs are under the MiCAR scope or not. I will now go into the crypto asset service providers because for them, I think the market will change quite a lot. In this slide, you see some of the services that are marked in green, some of them in gray. Those in gray are actually these services in the virtual currency space that we are already familiar with. So exchanging your virtual currency to another virtual currency or to a fiat currency. And there is a lot of other services that now come with the MiCAR regulation. Of course, the virtual currencies are now SWIFT to crypto assets, but if you're a crypto asset service provider currently, you have to look into really detail whether any of these services apply to you as well, because there is many of those. All the crypto asset service providers have to go through authorization, and authorization becomes quite similar to what we currently know for the financial institutions. So you have to issue kind of a short version of your business plan. You have to do the fit and proper suitability assessment, as Siim Tammer was talking previously about as well. You have prudential safeguard requirements. Of course, there are internal rules, which are not only regarding AML, but more specifically, for example, complaints handling to services that you're providing. So it really depends what service you're going to provide. Description of internal control system, IT, AML. So it's getting quite similar to what we see in the financial sector for a long time already. And the timeline is more or less 4 to 5 months under the current text of MiCAR. So at first, when the authority gets the application, they have kind of 25 working days to say whether this application is complete or not. So they have this kind of assessing period before they go into the detail, which is, let's say, a bit different from the financial market. But anyway, they are going to say whether they need any other documents or this application is complete. And if it's incomplete, they're going to give you another deadline for submitting new documents and information. And then they will go into detail. They may suspend the period of 40 days assessment for 20 days, which actually means that you have to submit new documentation, and then they will give the decision. So it's more or less 4 to 5 months. And as I was saying previously, and starting off that currently service providers dealing with digital assets do not have the possibility to passport, whether it's an authorization, registration, or license, what they have in any of the member states. This will be sorted out with the MiCAR regulation. So if you have a license in one member state, you can passport it. And actually, to say the passporting regime is quite simple, I would say that in 10 working days from getting the application, it will be communicated to the other authorities in the EU level as well to the host state authority. And from there, 15 working days later, you can actually start providing your services throughout Europe. Of course, in the application, you have to submit some important information as well, but this will actually take away the current situation that you have to go from one member state to another and start applying for the authorization. Important is also prudential requirements. In Estonia, we have quite heavy prudential requirements right now for the virtual currency service providers, but with the MiCAR regulation, they are setting prudential requirements for all the crypto assets. The prudential requirements are from 50,000 to 150,000 for the minimum capital, depending what service you are providing. What is an interesting aspect regarding this minimum capital requirement is that the MiCAR regulation says that it can be either in own funds or in insurance or guarantee or a combination of these two. So how it will actually go, whether there are service providers who are willing to give such an insurance or a guarantee is questionable, as we see also for some other financial market participants that, for example, in payment institution, it's quite hard to get insurance or guarantee. So whether there are any such market participants willing to give it is questionable, but anyway, it doesn't have to be in own funds only. Now, something for the traditional financial market participants, because I know that there are quite a few of you here today as well. So important for the credit institution is that under the MiCAR regulation, actual credit institutions are able to provide all crypto asset services, as you can see from the table as well. Of course, it requires a notification, but in anyhow of the competent authority. But in anyhow, if you're a credit institution, you can actually provide those services. Now, regarding the investment firms, which is also one of the market participants in the traditional financial sector, getting a lot of use of this MiCAR regulation is that if you're having investment firm license currently, then if the MiCAR regulation comes, you can provide those services under the MiCAR regulation for which you have corresponding license under the MiFID. So the MiCAR regulation is outlining which services in the MiFID and in the MiCAR regulation are corresponding, and if you have the license under MiFID, you can provide those services for crypto assets. This has actually made some quite interesting market is, well, how to say, the investment firms currently in or crypto asset service providers have been discussing in the EU or in that whether they should get a license for the investment firm currently, so that they would not have this 4 to 5 months under MiCAR regulation to get license and then another month or more to passport their services throughout Europe, but they would be getting the benefit of being the investment firm already now and then just notifying the competent authority. So this has been the discussions of some of the market participants on the EU level, but we'll see how many of these investment firms we will have then before MiCAR is going to enter into force. The notification has to be done to the home member state authority, and this should be done 40 days, working days before actually starting to provide the service. Important would be that passporting, if you are now the traditional financial market participant, then the passporting follows still the requirements applicable for the traditional financial market participant, and not those in the MiCAR regulation and for the crypto asset service providers. And if you compare here that otherwise you have 4 to 5 months, or if you're already acting as a market participant, you have 40 working days, then of course you have some kind of benefit compared to the crypto asset service providers. Now, for those who are outside of EU, then the MiCAR regulation is setting the well-known principle in EU, but not really in the legislation, reverse solicitation, that if you're providing or soliciting your services into EU, then you have to have the license under the MiCAR regulation. However, if the client initiates at its own exclusion initiative to get your services, then you do not need to get the license under MiCAR regulation. But this has to be looked into closely, because if you have the requirement to get the license, then you should act on that quite quickly. The final part that I'm going into is issuing crypto assets. And currently the issuers are quite, how to put it, they're quite concerned what are the requirements and where it's going to be a lot more burdensome compared to what they can do currently issuing crypto assets. I would say that if you're going to issue crypto assets in simple terms, not asset reference tokens or e-money tokens, then the requirement for you are not so heavy. You have the requirement to draft and publish a white paper, but at the same time, this white paper does not have to be approved in prior by the competent authority. Of course, the notification has to be done sometime before you actually are going to publish the white paper. For crypto assets, it's 20 working days, but you don't have to get such an approval. Of course, the competent authority is going to look into the white paper. There might be modifications needed and so on, but it's not like an authorization of getting your white paper or issuing an authorization. There are also other requirements which I won't go really into detail, for example, for market communication and so on. But in overall, I would say that the requirements are not that heavy for simple crypto assets. Now it's a whole different if you're gonna issue asset reference tokens, because these tokens are considered much more riskier, which is also the reason why the assessment of issuing such crypto assets is much heavier. Issuers need to apply for an authorization. So it's not only that you have to get your white paper approved, but you have, as an issuer, you have to be authorized to do it. And together with your authorization, also the white paper shall be approved. There are some exemptions to the issuing, that if you're over a period of 12 months, the outstanding value of the asset reference tokens is less than 5 million, then you do not need this authorization, or if you're added to qualified investors. There are some other requirements if you're a significant asset reference token issuer, but I don't think that this is that common that these kind of assets will be issued, so I will not go into that. But as you can see, then this length and timeline of authorization is quite heavy, even compared to the crypto asset service providers, where it was 4 to 5 months. For asset reference token issuers, it is 8 to 9 months. So it is quite a long time. Now, when we come to the e-money tokens, and as I said, most of the stable coins currently are e-money tokens, then such tokens can only be issued if you're a credit institution or e-money institution. So as you're authorized already, you do not need to go the authorization process through again, but well, you need to have the authorization previously. And you have to draft and publish white paper, similarly to the other crypto assets. And as well, you don't need to have a prior approval by the competent authority, but you have to notify 40 working days prior. So there are, of course, quite significant rules for the issuing of crypto assets, but it really depends what kind of crypto assets you are going to issue. Whether it's simple crypto assets as a comprehensive meaning in MiCAR regulation, or it's more specific asset reference tokens or e-money tokens. So this should be looked into carefully as well. Some few aspects more for those who are more crypto enthusiasts, then it has been a discussion point where DeFi is in or out of the MiCAR regulation. And it's strange that every time when the regulators are talking about it, then they are saying quite strictly like, no, DeFi is out of scope. So we will see when the new MiCAR is coming in the future. However, if the lawyers go into the MiCA text and to the preamble, then it is quite concerning what is said there, because the MiCA regulation is saying that only fully decentralized platforms, applications are out of scope, but you don't have a definition anywhere what is fully decentralized. And knowing the crypto space, I think we know that even in decentralization platforms, you actually do not have fully decentralized systems, not all the time, sometimes, but the MiCA regulation is saying that if it's not fully decentralized, you actually fall under the MiCA regulation. And for the crypto asset service provider, what is important is that even if you are dealing with such crypto assets where you don't have an identifiable issuer, so these crypto assets in the DeFi space, you still fall under the MiCA regulation. So you're not exempted due to the reason that you're dealing with such crypto asset from the MiCAR. And taking into consideration this preamble, then actually we have to look case by case basis whether any of the crypto asset or crypto asset service providers or DeFi applications are within or out of scope of MiCA. Just final words regarding, for example, market abuse regulation. MiCAR is also foreseeing regulation for that, and it's then distincted from the market abuse regulation that we know currently. And then there are also sustainability aspects that you have to report how you're sustainable to the competent authorities. I know that the later presenters will go much more into detail about the MiCAR timeline, but there are some things I would like to say about this as well. We have the vote in the EU Parliament should be in February. It had to be in December this year, but it will be most likely in February 2023. So it means that MiCAR regulation is gonna enter into force in Q1 2023. Then we have 12 months until the provisions for asset reference tokens and e-money tokens will come applicable, and another 6 months when the MiCAR is fully applicable to all in its whole beauty, and also to the crypto asset service providers. Now, what is interesting in the MiCAR regulation text is that the crypto asset service providers who currently have the license or an authorization under the AML directive, meaning the virtual currency service providers, can have another 18 months after Q3 2024 to start applying the regulation, unless the member state decides not to apply this additional 18 months or reduce it. I would say that what is important within 18 months that even if the member state shall not transpose it this 18 months or they are gonna take use of it, then you cannot actually passport your license if you're not a crypto asset service provider under MiCAR regulation. So if you're even operating under as a virtual currency service provider, then this 18 months you cannot expand unless you take yourself under the authorization as a crypto asset service provider. So I think that this is an important aspect that most likely the crypto asset service provider want to become regulated under MiCAR, even if they have the possibility to keep operating as a virtual currency service provider for some time. So yeah, this is more or less all from my side.
All right, many thanks. From the Q&A section, I see two questions. One is, I would say, very philosophical. Other is, well, even more philosophical. Well, the first issue that I wanted to raise myself was kind of the gold plating and race to become the first. Would you see a realistic situation that some of the member states actually shorten the adoption period for some of the service providers? And the second part of the question is kind of a gold plating issue. The minimal capital requirement in the kind of final text is 150,000. Possibilities that there will be member states that actually require more?
Well, for the first question, then I think that there are member states that are going to reduce the period because they have such a possibility. And as much as I've heard that then there are discussions also in Estonia because we had to have the crypto asset regulation in Estonia, but now it has been stopped. So most likely they are also discussing as one of the possibilities to start applying MiCAR before that. And as much as I've heard, it's also under discussion in some of the Western European countries because they actually see the benefit of this regulation. For the second question, yeah, of course. Even in Estonia, we currently have prudential requirements much higher than in MiCAR, so they most likely might be higher also after the MiCAR application.
All right. The capital requirements, what do you think about this?
Yeah, I think that some member states are going to apply stricter requirements, higher.
Okay.
As in Estonia, we currently also have higher.
And the second question is, well, it's a philosophical question. Me and Anneli, we have done a couple of. We cannot call them licensing, as this is half registration of the asset service providers in Estonia. There's a question that I will just read out. Is the authorization process in Estonia already in line with MiCAR? What? I think not,
No.
honestly, because firstly, it is nothing compared to the actual licensing process provided by MiCAR. Most likely, the supervision authority is a kind of a full supervision authority. We have FIU who had very kind of short hands and low budget for this. But in sense, kind of the recent rules, are we going towards this direction or not?
Yeah, of course we are going because in Estonia we have already like a business plan. We have some requirements on the fit and proper in the legislation, what is also introduced by the MiCAR. We have requirements to the IT systems, to the internal control system, but regarding the internal rules, more or less only the AML rules are required until now. But this will be expanded. So I think that, of course, we have bits and pieces already, and we are going towards MiCAR regulation, but it's not the same. So to take maybe as a comparison what is required from the payment institutions, then more or less, of course, the internal rules are different, but more or less the documents are quite similar, and this cannot be compared exactly what we have currently for virtual currency service providers.
All right. Once you mention gold plating, it starts to evolve its own life. We have a question, basically again linked to gold plating, meaning that how in compliant with the general EU principle would it be that we have stricter requirements? But then I think, well, that's the story with everything, the MiFID and also IFMD and so on as well. Kind of what do you see? How in line would there be with MiCAR if there will be member states that actually go for much more further than is required by MiCAR right now?
Well, I'm not sure that they are going much more stricter in a sense that this MiCAR regulation, and as Siim was previously saying as well, is that MiCAR regulation is strict anyhow, and it will be quite burdensome for the member states to start applying it. So I think that the member states first try to apply the MiCAR and then think about something else, that whether they need anything, because we have to take into account, and that what I wasn't actually mentioned previously is that MiCAR regulation is not the only one. EU is going to adopt technical standards, which are going to be quite heavy. They're going to adopt guidelines. So I think that the member states have quite a lot in their hands without going even stricter. I don't think that they want to go stricter.
All right. I think we are 1 minute ahead of the schedule, so we can call it a day. Anneli, many thanks, and we'll see what will happen. I will now hand on the floor to Joosep from Chainalysis, and we go now into much more kind of technical issues and on much more, let's say, already conciser issues, knowing the uncertainty with what will happen with the MiCAR. It will be adopted. There might be smaller changes, which is most likely unlikely anyway, but nevertheless. So Joosep, thank you for joining us, and you have the floor.
Thanks, Marko. Maybe just stay on for a little bit. Let's test if my presentation works with similar, so we don't have the similar situation as with Anneli.
Yeah, there was an issue, I think, with the full screen that didn't work. But okay, I think it was, even if you don't use full screen, it was still relatively okay. We could see the slides.
Okay.
Yeah, in the background, just to say we are recording, and then we will make the recording available to the participants. All right. Okay.
You can see my screen?
Yeah, but then we see the first slide. Just double check with trying to. Yeah, okay, works. We see the other slide as well. Okay. All right.
Great.
Off you go.
Thank you, Marko. Yeah, hi everybody. My name is Joosep Vahtras. I'm the compliance advisor lead in Chainalysis, like Marko mentioned earlier, and I will take you through the hotly debated travel rule and some of the AML requirements that they bring, and then we talk about some of the practical solutions for the implementation. So we'll be looking at what is travel rule, the scope of the travel rule, then some of the application and challenges. And then we look at the AML provisions and the compliance practices around that. But before that, just wanted to introduce Chainalysis to the folks that may not be familiar with us. We are a leading blockchain data provider. We have about 1,000 customers, both divided into government entities and commercial sector. We work with cryptocurrency businesses, fintechs, and financial institutions. And on the public sector side, law enforcement, intelligence, and regulators. So how it works is essentially we provide the phone book of the cryptocurrency. As you may know, cryptocurrency addresses are pseudonymous. So Chainalysis clusters some of these addresses together, identifies them, and then sort of assigns a risk category to each identification. So folks that use our services know who they're interacting with. Some of our happy customers are listed here. As I mentioned, we work with everybody in the cryptocurrency space and in public sector. So we are trusted by quite a few big names here, as you can see here on the slide. Okay, so jumping into travel rule. What is travel rule? So travel rule is essentially the new regulation that requires that the information about the originator and the beneficiary travels with the transaction. This can be sort of divided into three pieces. So we have the collection part, which normally happens during the onboarding process when cryptocurrency business is onboarding their customers, the KYC process or the CDD process. They will collect the necessary information from the let's say the originator, and then they might ask their client to provide information about the beneficiary. Then the second part would be identifying the transactions. So I will comment on that a little later, but there are some transactions that are out of scope of this regulation. So identifying on which transactions the information needs to travel is obviously key. There can be various different methods to identify those transactions, one of them being using blockchain analytics, but I'll also comment on that a little later. And then there's the transmission part, where information needs to travel, and most likely CASPs need to find a provider that can transmit this information. So there are multiple different messaging platforms out there. So you might be better off with a vendor that supports multiple payment protocols, because there are quite a few out there, and depending where you are in the world, some of them are more sort of popular than others. A little bit about the history. So how did it come around? So FATF, which is the Financial Action Task Force, they included or suggested countries to include cryptocurrency transfers also in the scope of Recommendation 16. So this is the transfer of funds, let's say, regulation, if you will, which has existed for some time now, and previously only included wire transfers. So now cryptocurrency payments have been brought into the scope of this, and therefore CASP also needs to transmit this originator and beneficiary information together with the transaction. So in order to comply with the FATF recommendations, EU included the transfer of, or included that in the sort of the anti-money laundering package that they proposed July 2021. So they issued a recast of the regulation of transfer of funds regulation and brought the cryptocurrencies under that regulation. EU actually went a little further than FATF. So initially, Financial Action Task Force suggested let's say a milder approach to travel rule, but EU decided to take a more let's say stricter view on this. So a few examples is the threshold. So FATF initially recommended a €1,000 $pound transaction limit, but EU decided to go with 0. So did Singapore, but we have in the States, we have a much higher threshold. So there is definitely a bit of a, let's say, uneven playing field among different jurisdictions. Another hotly debated issue has been private wallets, or self-hosted wallets, as they're called in EU. Initially, FATF sort of excluded them in the scope of this legislation, but EU brought them in, at least partially, and I'll get back to that a little later on during the presentation. So what are the objectives of travel rule? Obviously, they're there to prevent money laundering and terrorist financing, and to increase the, let's say, the transparency and traceability of crypto assets. But they're also there to level the playing field between traditional financial payments and cryptocurrency payments. Okay, so now that you have a bit of an overview what travel transfer funds regulation is and how it came about to be, let's look at some of the, let's say, elements that are in the scope of this travel rule regulation. So we have the, let's say, information requirements, or the information that needs to travel. So it is fairly basic information. Name of the originator and the beneficiary of the transaction needs to travel. Also the let's say the distributed ledger address or cryptocurrency address needs to travel. Unless this transaction is not conducted over the network, then there must be an account number that can be used instead of the let's say the blockchain or cryptocurrency address. Then also the originator needs to include some more information about the originator. There's the address requirement, and also the let's say customer identification number, or if that is not available, then a date and place of birth. Also, if available, the legal entity identifier should be included. And then there's the, let's say, the verification requirement that both sender and the or the originator and the beneficiary needs to verify that this information is correct. So they need to do that on their own client. So obviously, the originator would not be able to verify the information on the beneficiary, and vice versa. So, and this information needs to be made available to relevant authorities without any sort of delays. And this information should be retained for at minimum 5 years. Now, what kind of transactions are covered? So we have cash to cash, the crypto asset service providers to crypto asset service providers. This is the full set of requirements, fairly straightforward use case. There's no minimum threshold. With all transactions, the information needs to travel. But there are some special requirements where we have the cash to self-hosted wallet and the other way around. There are, let's say, requirements that we don't, or sorry, that are somewhat different to the FATF one. So, for example, here, this is what I was mentioning. The first-party transfers with self-hosted wallets above €1,000 should be verified. So verification of a self-hosted wallet can be somewhat burdensome or difficult, and I'll explain later how we can actually practically do this or what are the available solutions. But for now, just keep in mind that if there's one party, one service provider involved, then let's say there are special requirements in the provision of travel rule. There are also some privacy concerns. So if the CASP has reasons to believe that the beneficiary CASP is not a good sort of guardian of the data, then the PII data should not be sent. So this is another sort of caveat that companies need to keep in mind. If there's any sort of indication that the data might not be safe with the CASP, then it shouldn't be transferred. And what is out of scope is transfers between two self-hosted wallets. So what is the sort of practical application of travel rule? So if we're looking at some of the things that I mentioned earlier, when we're looking at cash to cash, collection and screening of information is required, verification of that information is required, and so is the transmission of data. Now, if you're looking at CASP to self-hosted wallets, collection and screening of the data is required, and verification is only required for a first party above €1,000. Transmission of data is not possible because let's say the receiving self-hosted wallet wouldn't be able to receive that data. So In that sense, data needs to be transferred, but the originator CASP needs to collect the full set of information before they're allowed to execute the transfer. So this information needs to be provided by the customer themselves, that has sort of the payer or the originator customer needs to provide information about who is the beneficiary of this transaction. And unless they're able to provide that, that transaction should not be executed. Now, if we're looking at self-hosted wallets to CASPs, it's the same information collection and screening requirements apply. So it's required to have this information. The verification of first parties is also necessary to do. But the transmission of data, like the case before, is not possible. But in this case, you may know that cryptocurrency transactions cannot be stopped. So sometimes if the customer already knows your cryptocurrency address, they can send that transaction either way, right? So, and if any transaction is sent with, let's say, incomplete information, then CASP needs to on a risk-based approach, either execute or reject the transaction. So they have opportunities to either go on, ask for additional information, or assess the risks related to the transaction, and then either to execute it or reject the transaction. So what are some of the, let's say, the challenges that we as an industry face? Because this, let's say, regulation works very well with a financial system that is intermediated, meaning that every transaction is between two central parties, which is not necessarily the case always with cryptocurrencies. So cryptocurrency essentially was created as a peer-to-peer system. So a lot of those transactions obviously still are peer-to-peer, although based on the data that we see, most transactions obviously happen between two service providers, but there are cases where this is not the case. So hence the issue of, let's say, transaction identification. As I mentioned, it's a key component of travel rule to identify which transactions the information needs to travel. But there is no sort of available technology to determine with 100% accuracy if a wallet is self-hosted or hosted by a custodian as a service provider. So there's nothing about that type of wallet that is being used that will tell you if it's hosted or self-hosted. So that creates obviously some let's say challenges to the industry, because they need to figure out, the CASP needs to figure out if the information needs to travel or not. So what they can do is they can ask users to self-identify these transactions. So they can say, okay, I'm sending money to myself in, let's say, a competing CASP, or I'm sending money to my friend. That transaction or that wallet address should be with a specific cryptocurrency service provider. But obviously, customers may or may not know this information at hand. So that presents sort of issues, and obviously another issue could be if they're truthful or not about if this wallet is hosted or not. One solution that can be used, as mentioned earlier, is on-chain analytics. Products such as Chainalysis KYT would be able to tell you with a high degree of confidence if this transaction belongs to a service provider or not, but there's no sort of 100% bulletproof way. So I think I don't want to put a percentage to it, but we can do, or blockchain analytics companies in general can do this with a fairly high degree of confidence. But there is obviously cases where we won't be able to identify all wallet addresses that are hosted. So this is one of the challenges that that industry needs to figure out. As we mature, because this is all a very new area for everybody involved. But hopefully, as an industry, we will figure out a better way of working in order to overcome these challenges. One of the other big challenges is essentially transmitting this data. As mentioned before, cryptocurrency or blockchains itself are not necessarily designed to send any personally identifiable information alongside the transactions, because blockchains are immutable, and personal identifiable information may not be beneficial to store forever on a blockchain. So that creates a problem that we need to find a way how to transmit this data. Because if you look at, let's say, Swift, which is essentially a messaging platform that everybody uses if they want to wire transfers, let's say, internationally, we don't have the same sort of one single transmission protocol or messaging protocol for the cryptocurrency industry. So there are a number of different protocols out there. I think last time I checked, there was about 10 of those different messaging platforms, everybody having their sort of pluses and minuses and pros and cons. And their popularity varies across different jurisdictions. So over the other side of the Atlantic, in US, there are certain protocols that are more, let's say, popular. There are certain protocols that are popular here in Europe, and APAC has their own sort of, let's say, preferred messaging platforms. So interoperability between those competing protocols in the market is obviously a challenge, because if you want to do business globally, and cryptocurrency obviously is a payment method that knows no borders, it can, let's say, introduce some challenges into this. So one way to look at it or solve this issue is to try to opt in for a end-to-end travel rule provider that supports multiple messaging platforms, which gives you which gives the CASP the opportunity to have, let's say, a system that is more interoperable than just using one or two messaging protocols. Also, another issue is that this data in Europe is protected by GDPR, but there might be different, let's say, data retention requirements across the globe. So sending this data over to different parts of the world, might create some additional challenges. So another key area about travel rule is missing information. So if the information is incomplete, virtual sort of crypto asset service providers should have effective procedures to detect any of these information that is missing, and also take action if they see this happening repeatedly. So if a CASP is receiving, let's say, on a reoccurring basis, transactions that don't have the complete information, they first should obviously contact the corresponding service provider, maybe try to issue some warnings or set some SLAs or deadlines. But if that doesn't do the trick for them, they should consider either determining the business relationship or limiting perhaps the scope of the relationship. So this could be setting transaction limits to those crypto asset service providers. So if let's say I want to transfer some funds to a CASP that is reoccurringly failing to meet their obligations, those transactions may be capped at a certain transaction threshold, which would then limit the risks for the originator CASP. So this is the sort of black and white rule-based sort of part of this presentation. But we also have a new AML provision that was introduced together with this travel rule. So until we have the new AML-R, which is the new AML regulation, there has been changes made to the AML5D or AML-D5, adding a provision regarding the, let's say, the risk-based approach when handling the self-hosted wallets. So the article states that crypto asset service providers must have internal policies and procedures to identify and assess these risks associated with self-hosted wallets, and then apply, let's say, mitigating measures when these risks are identified. So there are three main, let's say, ways that they can do this. They can try to verify the identity of the originator or the beneficiary, depending on which side of the transaction it is. Then asking for additional information about origin of origin and destination of funds or use blockchain analytics to obtain this information, and then conducting enhanced ongoing monitoring of these transactions. There's also a fourth option that is sort of if there's any other possible measures available. So if they have anything beyond these three that could be used, they could also use that as a mitigating measure. And generally, if they come across any of these transactions, they obviously should then report them to the FIU or any sort of relevant authorities. And one other thing that they should consider is that if there is information missing, that also may be a sort of a red flag, and they should assess if the transactions are suspicious or if of this sort of withholding this information increases the risk of this transaction. So now I will go into a more sort of pragmatic or practical look of how we can do this in practice. So what does these measures mean? What kind of technological sort of products are there available in the market to assess and mitigate some of these risks? So so the enhanced due diligence measures related to self-hosted wallets, especially the verification of it, there are quite a few ways how to do this. So one would be the Satoshi test, which is asking the self-hosted wallet owner to send a small amount of Bitcoin to verify that they are in control and they own this specific wallet. This obviously is burdensome for the user and costly because small transactions may not be prioritized within the, let's say, the network. Therefore, this is very time consuming and not a pleasant experience to the user. Then perhaps most widely used solution is providing screenshots. So this would be the customer providing screenshots either from the wallet or from the CASP or any other sort of ways, or taking a video call. This is there is obviously pluses and minuses. It's easy for the user, but it's also prone to, let's say, tampering or manipulation of data. Sending screenshots over may not, these are pixels, so you can do whatever you want with them to say whatever you want them to say. And additionally, for the service providers, this is extremely labor intensive. So they need to look through various different screenshots. This normally would probably be a manual process. So it's not a great way essentially to verify this. There are also manual signings of transactions. So this would need to be prompted by the service provider, sending a message that the user then signs. This can also be somewhat cumbersome to the end user, as some of them may not be that fluent or let's say literate in cryptocurrency and may find this difficult to sign these messages. But this is probably one of the better ways of identifying let's say the self-hosted wallet owners. And there are some other verification methods available by service providers. There are quite a few of them. They also have their pluses and minuses. Obviously, one of them being that it's provided by a third party, so you lose some of the control in the process, and they normally are not for free. So it introduces a new sort of cost area to the crypto asset service providers. Then let's say the acquiring information about the destination of origin of funds and conducting enhanced ongoing monitoring. Here, blockchain analytics can help. And within the next slides, I'm going to walk you through some of the, let's say, ways that blockchain analytics can help and best practices in that regard. So using transaction monitoring, blockchain-based sort of transaction monitoring is obviously key to identify any risks associated with those transactions. This can be used for both sides. So incoming payments from self-hosted wallets, the risk level can be determined, and then let's say CASP can monitor and assess the risks associated and take any sort of mitigating actions, then either not making those funds available if they're above a certain risk threshold, or then potentially limiting some of the transaction limits for the customer. The same can be done for outgoing transactions, so they can monitor, but obviously that would be a sort of a reactive approach in this case. But one of the key elements to consider when choosing a vendor like this, obviously, is that it should be real time. There should be, let's say, high degree of ability to configure compliance rules, and investigations and enhanced due diligence, let's say, features should be there as well, because that's a key part of identifying those transactions that needs to be reported in the end. Just a quick reminder for let's say folks here that are not so familiar with cryptocurrency and cryptocurrency transaction monitoring. If we look at the let's say the traditional payment flow, we only see the direct relationships between the financial institutions. So money sent from, let's say, Swedbank to LHV. They will only see that leg. If that money is then sent further to somewhere else, the originator wouldn't necessarily know where these funds are sent. Whereas in cryptocurrency, it's fairly different. So as you can see here on the slide, even though we don't know who the wallet belongs to necessarily, if we do the enhanced due diligence measures, we can be sure that this is our customer. But we can also see if that customer then, as a second or third transaction, transfers those funds into any illicit entity, or the other way around. If the funds are coming from an illicit entity, let's say 2 or 3 steps prior. So this is obviously, very powerful tool to mitigate and assess any risks related to transactions with self-hosted wallets. And we strongly encourage, using the available technology to minimize those risks. But we also have an option to be proactive. So there's something called address screening. So in blockchain analytics, it's also possible to screen an address prior allowing it to transact. So this would be if, let's say, you are the originator of VASP and your customer is sending funds to a self-hosted wallet, you can configure rules, for example, that would block certain transactions altogether. So this could be, sanctions, terrorist financing. These are the sort of clear-cut cases where you definitely don't want to send any funds to protect your entity from any, let's say, criminal liability. But also, in general, reducing exposure to risky services. Certain transactions can be blocked. With that, you can show the regulators a proactive attempt in developing best practices and controls. But you also can protect your consumers, because there's a lot of scams out there in the cryptocurrency market. So this, even though it is meant for perhaps travel rule compliance, but you could also protect your users. So if the user is about to send funds to a scam wallet, but they are identifying the wallet as someone's private wallet, you can step in and protect your customers and prohibit these transactions to be sent in the first place. And if there's any sort of transactions of interest that you then want to take let's say a further look into, investigative tools are available that enable the CASP to let's say trace the flow of funds, have a sort of visual view of how the funds move around. Also, depending on the vendor you choose, there might be cross-chain graphing tools. So D5 was mentioned earlier in MiCAR. So this is an area we see big growth in. People are transacting on DeFi. So that means that they're moving value potentially from one chain to another, or from one token to another. So which can impair the way that we do investigation. So it's key that the vendor that the CASP choose have these abilities to create a holistic view of how the funds move. And then obviously reporting these transactions is the next step if the suspicion cannot be alleviated. And we have spoken to a few FIUs across the world. Some of them are customers, and we have asked them, let's say, what are the key value adds for let's say SDRs or SAR reporting. And what we have gotten back is that they greatly appreciate also additional information, not just the narrative and the names of the customer, but IP addresses, cryptocurrency addresses, transaction hashes, but also, for example, the financial forensics that the CASP or the compliance team in the CASP has conducted. So in Chainalysis, for example, we enable our customers to share reactor graphs. So we have created a data format, so folks can download the graph and send it over to their FIU together with the SDR filing, so they can open it up on their end and see the same thing. So they don't need to reconstruct it on their own or use screenshots to do this. They can actually open the graph and they can validate if, let's say, their service provider has done the investigations correctly or not. But also key points would be specific communications that that the CASP has had with the customer, any email addresses or any other, let's say, financials that might be valuable to this. Okay, I think I'm actually more or less on time, so I'll open the floor for any questions.
Wow, brilliant. Thanks, Joosep. I'm waiting for some of the questions to pop up, and I will use the time for my own questions. Well, in a very quick takeaway style, what do you see the future bringing, especially the new AML package coming up regarding the travel rule and the requirements on travel rule?
I think so currently it only covers the self-hosted wallets and some of the, let's say, the risk elements around that. I think we will see a more sort of detailed guidance on what should be considered risky and how we should handle these situations. Yeah, so I'm obviously can't see in the future. We haven't seen the final text, but I think there will be more sort of descriptive text in how high risk situations should be managed and what should be considered as high risk. Previously, the reporting standards have been fairly vague. Anything you consider suspicious, but not necessarily highlighting what these suspicious activities might look like. Or so hopefully some typologies and high risk factors would be included, so CASP have an easier time setting these thresholds and understanding what is risky or not and what should report it or not. I don't know if that answered your questions. I went on a bit of a
okay, but then keep going even further. We are looking at the time span of 5 years when we have most likely much more, not regulation coming up, but the market is more and more getting licensed and supervised, and there will be, in addition to supervision issues, there will be for sure some kind of conduct of business rules as well. Obviously, DeFi is a separate issue. We do not quite know what will happen and so on. But nevertheless, how you see also the market in terms of service providers regarding travel rules changing, and what will the future bring in the next couple of years?
Yeah, that's an interesting market. As I touched upon earlier, the messaging platforms and the, let's say, fragmentation in the market in that sense, that we don't have one provider or one solution. So as we mature, I think there will be sort of winner takes all effect, hopefully, or at least I personally hope that there would be either few protocols that would win the race, so we will have less ambiguity. Because today, if we speak to service providers and we talk, they ask us questions about travel rule, one of the key things comes up is which protocol should we choose, what vendor should we choose, because this is let's say the part that I just presented to you, the rules based, it's fairly simple. I mean, information is available, it needs to be transferred. There are some, let's say, risk-based decisions that needs to be made in terms of AML, but this is nothing new to those service providers as such, because they do this on a daily basis on transaction monitoring anyways. But finding that balance between which messaging platform, who do I need to go with in order to not have any frictions in the market, I think this is one of the most difficult part, and hopefully we'll see some of these let's say platforms or protocols emerge that would make the life easier for CASP, so they don't need to use multiple different platforms for every cryptocurrency business that they're going to transact with. So that's my hope, and hopefully we'll see something like that.
in the next 5 years, well, obviously what is changing in Europe is one of the largest packages of rules coming up to cover a relatively unregulated sector. How do you see the Europe as a market in terms of competing with other parts of the world? Is this beneficial or not? Why I'm asking this is really this segment of market is, well, it's a kind of a difficult market, but nevertheless you have market participants, you have the service providers and so on. That's a good example of what changes in terms of competition between the parts of the world actually brings. What are your insights on this?
Yeah, I think so. Generally, I think the view, my view, and I think, as a company, Chainalysis, we look at regulation being good. We welcome this, and we see this. So, for example, when we talk to large financial institutions that are looking into making the move into the cryptocurrency space, they won't move until there's regulatory clarity. They want to be sure that the large banks of the world, the big giants in Europe. I'm not going to name any names, but a lot of them are looking into entering the space, but they don't want to make a move before there's clarity. So obviously, regulatory clarity is key for, let's say, wider scale adoption. And I think to bring crypto assets to retail users, large banks providing custody for them, I think would be key. Now, if we're talking competition, EU has taken fairly strong stance on few of these elements. We still don't know exactly how the let's say we have the travel rule text, but how the private or self-hosted wallets will be treated under the new AML is somewhat let's say up in the air. So if they lay down even stricter rules, there might be other competing jurisdictions like UK, US, that may benefit from this if they want to open up for this market. And we have seen some of this already, how EU has taken a fairly hard stance on stable coins and adding limits to that. So we don't necessarily think FATF initially came out and said everybody should have a fairly uniform rule, so there's less regulatory arbitrage. But we see that in practice, a lot of these jurisdictions still, for whatever reasons, decide to go either very hard or a little bit more lenient. And that obviously, makes this problem even more pronounced, because now companies can pick and choose again, as there are significant differences in approaches. And I don't necessarily think that's a good thing, but nobody asked my opinion anyway, so.
Right. We have a question from the Q&A as well, basically addressing the issue that, in your opinion, do you see that the travel rule could be applied in short time frame? And also, considering the rules, can you bring out any negative sides? Well, the mixer users will send assets out of the European area for fiat exchange and send it in via payment service providers or something similar.
So applied in the short time frame, yeah, I think so. I think I think the providers are there. I mean, obviously, it may not be a fully, let's say, compliant solution, but I think we can get to, let's say, a large part covered fairly quickly. I think the market is mature enough for that. Obviously, within years to come, we'll iron out some of the smaller details in order to comply fully. But any negative sides, I'm not sure I understand the question about the mixers. Can you bring out the negative sides? I mean, obviously, mixers that should be taken with enhanced sort of view. So if you see any sort of interactions with cryptocurrency mixers, enhanced due diligence should be applied. So either we don't recommend necessarily blocking transactions to mixers, but then potentially asking your customers what is the purpose of sending those funds to a mixer. We have seen a lot of the mixer usage is actually legitimate. People want to stay private, But at the same time, as a compliance officer, this creates a problem for you if you work in the risk team in one of those service providers. But taking an enhanced due diligence view on this, contacting customer, potentially asking further clarifications of the reasoning for this transaction, I think these risks can be managed. Obviously, they introduce a bit of additional work, but I don't see that as a deal breaker as such.
Okay, which is good for Europe at least. All right, I will give 1 second. I will wait 5 seconds for any additional questions to pop up. Let's have the academic 5 seconds. And then if not, then looks like not. So hi, Janet. Hi from Estonia. Happy to have you. Janet has a background with the supervision side as well. And now with the Chainalysis, Janet has promised many things to tell the untold stories regarding the adventure behind having a common frame of rules for the digital asset market. So Janet, many thanks for joining us, and you have the floor.
Hello, everyone. First of all, thank you for having me. I have to say that I have only been a policymaker before, because also we have like a supervisor here. I don't want to claim the credit of actually doing the difficult job of being supervision, because sometimes writing the law is, I think, it's the easiest part in the whole regime. So for those who don't know me, I'm Janet Ho, head of policy for Europe for Chainalysis, the blockchain data analytics firm. So I recently joined a company looking after the regulatory development and the policy development in EU and wider Europe as a whole. Before joining Chainalysis, I was with the Financial Actions Task Force, the FATF, helping them to craft and negotiate the first AML-CFT, the anti-money laundering and counter-terrorist financing standards on crypto assets. They called it virtual assets. If we have to explain to you why it called virtual assets instead of crypto assets, I think we will have another webinar there. But that's me, and thank you for staying with me on a Friday morning after two very good presentations of MiCAR and also one of TFR on transfer funds rules on travel rule. So what in my presentation in the next slide, I will try to walk you through what is the background, what is the regulatory landscape in the crypto regulatory area, because I think understanding those issues will give you a more context and more understanding on how to read between the lines of the regulations. So on the next slide, yes, so there we go. You will see that there's lots of logos here, what we are talking about, and I hope you will be familiar with some of these names, and if you are not, I would suggest you just go into their website to search and actually Google what happened with their developments in crypto regulation drafting space and the guidance and the regulations. They usually have very good source of materials there. But you will see that I divided the slide into 3 columns, and I will explain to you why is that. So in the next slide, you will see, yes, that in this slide, you will see that crypto regulations at first started out all with counter illicit finance. For that, we mean AML, CFT, and also CPF. Because this is what, when the technologies come out, the regulators and the policymakers in this space were very concerned that this technology will be misused by criminals and there's no way to mitigate risk. That is all what started. So if you look at a lot of the regulations in EU and internationally and globally, a lot of these regulations is very strong on AML CFT. But from what our data have seen, and I think also this is also part of the reason that policymakers in recent years, especially in the past 2 years, have shifted this regulatory landscape from AML to other matters, more comprehensive regulation, is because the illicit activities as a percentage of the total volume actually has fallen quite dramatically since 2019. To give you a little bit of statistics here, in 2019, the illicit share of concerning crypto assets was about 3% of the entire universe of crypto assets transaction. But in 2020, it dropped to just over 0.5%. And in 2021, last year, it dropped to 0.15%, which translated into US dollars, we're talking about 14 billion out of a 12.5 trillion overall transaction there. So you will see that the risk landscape has certainly shifted a little bit, and it also invited the regulators and policymakers to think about what else should we do in order to ensure that this industry is growing in a responsible way. So you will see that crypto regulation have recently become more comprehensive, focusing on prudential matters, conduct of businesses, more recently also definitely on matters on governance, market integrity, and consumer and investor protection. So you will see that all these bullet points here are actually well covered by MiCAR, the markets in crypto assets regulation that the first two presentations have focused on about. A lot of these regulation is new, and in Europe we actually have a very good coverage, at least in MiCAR, focus on all these issues. But one point that I want to highlight to you is that not every region, not every country has this like a comprehensive regulatory regime. Some of them are still moving ahead. A lot of them actually are still working on their first bullet on the AML CFT regime. That the FATF is also looking into, but you will see that even in, say, for example, in US, in the UK, and also in Singapore, Hong Kong, South Korea, where we see a lot of crypto transactions activities going on, they are also still in the discussion of these prudential and all the more comprehensive regulatory standards and the rules there. So in that sense, looking in the regulatory development internationally and in different regions, we can say that Europe certainly has jump-started this process and provide the regulatory clarity there. So the question and the food for thought that I hope that you will come back to think about it is that after this presentation is that how can we ensure the regulatory harmonization of these different rules, and noting that crypto assets transactions is very global. Because for crypto transaction, it doesn't really just stay within EU, but it definitely goes through different regulations. So when different countries are developing these different sets of comprehensive regulation, and it will be a very difficult challenge for both the industry and also for the governments in understanding and implementing these rules in a harmonious way. So in the next slide, you will see that there's a, excuse me. Sorry, I come down with a fever this morning, so I'll try to plow it through. So on this slide, you will see that we have the brief timeline here. Anneli just now make a very good presentation on showing you the steps by steps if you are a CAS provider on how to prepare for the MiCAR rule. One thing I actually want to add into this timeline is also relevant for TFR, the travel rules that Joosep just shared with you, because in February, coming back in the next year, February, the European Parliament will have their one last vote on the voting of the MiCAR final text, and together with the transfer of funds rules regulation text, and together with that, and both pieces of regulation will enter into force, hopefully in the first quarter of the next year. But that is still for the provision to come into force, and it still needs a long period of time. for these implementation to actually get into the real operational phase. 12 months after MiCAR enters into force, we are talking about in 2024 stablecoin rules, that is asset reference tokens and e-money tokens that will start to apply. 2 quarters later, we're talking about 18 months after MiCAR entered into force. All other rules will apply, including the licensing of the crypto asset service provider. So you will see that there's still a long time frame. And this is not the end of it. And in 2025 to 2027, we still have the Commission will still do an implementation review on whether the operation of these provisions, the existing provisions in MiCAR, is actually running properly, and also the Commission, together with the EBA, the European Banking Authority, and together with ESMA, the European Securities and Market Authority, with the support of the European Central Bank as well. The four agencies will also look into different matters in the industry, including the development of the crypto asset service provider, the transaction that's happening, the market share that's happening, the activities that are happening, as well as the stable coins development. They're covered by the MiCAR. So these are the existing rules that will already be under the implementation review in 2025, starting 2025 to 2027. But during this period, in the existing current text of MiCAR, there is already a marker there to include a review on the development of decentralized finance and whether there should be additional legislative proposal to be included in it. So you will see that in MiCAR, when we talk about MiCAR regulation just now, you heard it from Anneli, we focus on the crypto asset service provider, those providing custody and a trading service, and also the transaction and an exchange there. And we focus also on the stable coins development there. So there is some different scope, different aspects that have already been scoped in. But to the policymakers in Brussels and other parts in different member states, they will think that whether this comprehensive regulation will be sufficient enough to capture the different developments in crypto space, such as decentralized finance. And that is the reason for this implementation review. In fact, I'm sure a lot of you might be familiar with the whole DeFi and NFT discussion that happened in the negotiation process that eventually been carved out, which Anneli also mentioned, is that why these two matters are, or two issues or two topics, technologies were not captured in the regulation. It's because right now, a lot of the members see that these activities have not been as material, as in their transaction size and the transaction volume is not that significant in the entire crypto space as of the moment that they finalized the negotiation. That's why they capped it out. That's on DeFi. And as for NFT, the discussion was why it was capped out. It was because NFT, they see that at the moment, there are still a lot of the use case is not really on the financial side of things, but on the artificial, the art values of the NFT development. So there's not like a material impact enough to cap them in. But it's not that these issues will be off the hook forever, because what in the current MiCAR text also provided quite clearly on the clarification there, that is what is meant by true DeFi. True DeFi will be out of scope, and non-fungible tokens to certain extents will be out of scope. But if there is an intermediary element there, and then there will be possible scopes, potential for scoping in. So you will see that, so there is definitely moving elements that everyone needs to watch out for. So on this slide, I showed you a little bit about what to look ahead, to think ahead. But on the next slide, I will go into tell you a little bit more about what happened between now and 2024. And the thing is, the ultimate question for us, especially if you're working on a compliance and understanding the MiCAR regulation, then why I should even be bothered looking at the rules now. So you will see that there a lot of the European agency, especially on the EBA and ESMA, from now and 2024, they still have a lot of work to focus on. And one of the very key works, the key dossier that they focus on is on the regulatory technical standards, the level 2 text. In this line, I outlined a few issues that what would need clarification. And because a lot of the service provider will look for the detailed guidance on how these should be implemented. I think one thing I want to highlight here, especially on the prudential side of the requirements, is that right now the MiCAR text has a very high level requirement, say on capital and on reserve and on liquidity for caps for the crypto asset service provider and the stablecoin issuer there. And going forward, and it will be very interesting to see when the RTS, the regulatory technical standards, coming out to actually tell us what is the methodology for calculating the capital requirements, to calculate the reserve requirements for caps, and also for stablecoin. Then what is the quality of the reserve assets and the percentage of the assets and the interaction within the crypto ecosystem? And with current events, market events that happened in the past few months, these will be definitely one of the most important tasks that EBA and ESMA together will have to work on some of these issues. And of course, there's a white paper disclosures argument. As some of you might already be familiar with it, for CAPS, the crypto asset service provider, when they prepare for the white paper disclosure there, they also need to include white paper for the assets token that they are traded on the platform. Say, for example, if they're trading unbacked crypto coins and crypto assets like Bitcoin, then they will also need to include a white paper on what they are trading on the platform on Bitcoin. So I think this will be an interesting development to see how the specific obligations and the requirements on these obligations, so to speak. And I think one point I want to add, one additional point that I want to add on the RTS here, is because we will see that different member states, they clearly already have some form of these requirements in their existing regime. And at the moment, EBA and also ESMA are working very closely with the member states to seek their guidance and their opinion and on their comments on these draft RTS. So as a service provider and as someone working in the compliance industry, you would definitely be interested in having a regular dialogue with your regulators and understanding the latest development. While the MiCAR text is very high level and there will more details to be coming out, one clear understanding, one clear messaging that we have heard from the Commission and also from other European agencies when developing these standards is that they are looking very closely, say for example on white paper disclosure, they're looking very closely on the rules, existing rules that ESMA has on prospectus regulation and also on capital requirements and all that. But one point that I want to flag it up here is that the white paper disclosure requirements, as currently stands in the MiCAR agreed package, the politically agreed package, is that the requirements for crypto assets is actually much more relaxed, we can say, because reason why is that when these white paper disclosure obligations were built in the negotiation process, a lot of the concern that policymakers and regulators have at that time was on consumer protection. Was to focus on the sort of malpractices in advertising crypto transaction. So if you go back to look at the detailed MiCAR text, that's the latest version that is available in the Parliament page and also Commission page, you will see that most of them are focused on disclosing the investment risk of the products, the market price volatility, the price fluctuation of these crypto assets that that consumers and investors are buying in. So these are the background and the knowledge on why the context of events that get into the development of the white paper disclosure rule for crypto asset service provider. But on the other hand, you will see that the white paper disclosure requirements concerning those of stable coins is actually much more stringent compared to those for crypto as a service provider. This is especially because of what happened in earlier this year with the stablecoin market development, and that actually prompted the policymakers at that time to craft more detailed rules for stablecoins in this regard. So I spent a lot of time on RTS there, but there is also a second element that between now and 2024 that the regulators in EU is focusing on. They will also need to carve out some of the information exchange requirements between the issuers and supervisors, and especially also supervisors at both national and European levels, because there will be a lot of, especially in the early, especially because the crypto assets transactions, the nature of it is very global. It doesn't really sit through in one member state. So there will be a lot of more talks in this space on what is the information exchange requirements for supervisors within, at least within EU, to understand their requirements, especially after the passporting rules have come into implementation. So I will move on to the next slide and give you two more tasks, which is quite very important as well, on what will happen and what actually keep EBA and ESMA and occasionally ECB busy with this MiCAR dossier. One very important part, the third point here, is that on supervisory policies and procedures. One thing that I wanted to highlight with you is that new supervisory model that happened and introduced in MiCAR. So from all the other traditional financial service regulation, that oftentimes the market players understood that they will be supervised by their national competent authorities. It's only when it's come to very significant events then the supervisory oversight will be moved up to other more supranational level. But here on MiCAR, this dossier is actually have a very specific rules on stable coins, supervision related to stable coins. That you will see that the issuers of assets reference tokens here will be supervised by EBA, and also for significant issuers of e-money tokens, they will under a dual supervision model by both the EBA and the national competent authorities. So this will be a new regime on how to carry out the supervision, and definitely there will be teething out period in understanding how that works. So if your clients and if your customers are focusing on the stablecoin issuers, the assets reference tokens and the e-money tokens issuers, then you will be very interested in seeing the supervisory policy and procedures that will be issued by EBA within the next 12 months. Another issue that is very important is on the guidelines. We also see that there are specific guidelines on how to, say, for example, on the stablecoin recovery redemption plans, and also a lot of details specific on how the operation for the stablecoin issuer. But in light of recent events, we would also be very interesting to see the guidelines issued by ESMA, the European Securities and Market Authority, together with the assistance with EBA and ECB on the prudential requirements for crypto as a service provider as well, and how to classify them as financial instruments or crypto assets or not, and also the minimal content of governance arrangements, on the suitability of members of the management board, not only for stablecoin issuers, but also for the caps as well. So these are a lot of the moving pieces that is still happening, despite the MiCAR has already secured like a majority support from both the member states across the EU and also across the European Parliament by the membership. But there's still moving parts on the specificity of the operation and interactions of these obligations. So on my last slide here, I will give you some of the very maybe the most important part of my presentation. Is that what is why? So we talk about that there are still a lot of tasks going on, and then why we still have to listen to MiCAR and worry about it now. Interestingly, want to share with you on some observations and what is happening now in different EU member states. Not going to name names. I think those are public information that is available. If you are interested enough, you can go search for that. But you will see that a few jurisdictions in the region, in EU, within EU, they are already conducting line-by-line review of the existing regulation regime in their own country with MiCAR. We see that there is signaling from very senior officials, from prudential financial supervisors, coming out to say that if the countries right now is operating on a two-track of CAPS registration and CAPS licensing regime, they are trying to wind down the registration regime and want to invite and move everyone, hopefully progressively, to the licensing process, because we know that it's the two different tracks. If you are following the registration regime right now, there's certainly more relaxed requirements. There's not as targeted supervision there. But if you're moving on to a licensing regime, which is actually much closer to the MiCAR authorization process, then you are subject to a more information requirement when during the application stage, and also a closer look into your supervisory model. So this is what we are seeing. That is happening, and in fact, a lot of the quite a number of jurisdictions, because they have been practicing a registration regime, and they have a massive load of service providers currently in the system. And that is actually creating a transitional challenge for the supervisors on how to ensure that they can grandfather these service providers to the new MiCAR regime. So you will see that quite a few jurisdictions in Estonia as well, and other countries are, in this region, they are introducing new capital requirements, for example, and also new AML-related compliance requirement to the in their national regime at the moment, which some of them we see that some of them actually modeled quite closely with MiCAR text, while others actually go a step beyond to require something in addition to MiCAR. Part of this process and part of this understanding is that because supervisors is trying to find a way to sort of triage the good players, the responsible market players, hopefully that they will still stay within their jurisdiction, to help them to set up shop and to help them smooth transition to the MiCAR process, because if they already comply with the existing national regulatory framework, then they will actually benefit of their regime. They will actually benefit from the simplified passporting regime in MiCAR regulation. So there is incentive for some of the countries to streamline their existing registered market players and to help the good ones to stay behind and to set up shop and headquartered in the jurisdiction. So this is the new developments, especially happened in the past 6 months. We'll see that a lot of more of these developments will go on in the next 3 to 6 months ahead of the MiCAR actual de facto implementation there. That's one thing. And moving on for the next point, and I will try to wrap it up as quickly as possible here in case I run out of time. So on the next point that I also want to call for attention is that we are hearing a lot of suggestions that MiCAR is not comprehensive enough, cannot address all the issues in this space, like what we covered on DeFi and on NFT quite recently. There is already talk about MiCAR 2. If you have been following the European Parliament hearing last week, you will see that there's a lot of questions on whether MiCAR is enough, the current text is enough to prevent any of the fraudulent events happened in this space. But at least from our understanding, that the European Commission is still working very hard on MiCAR. Implementation of MiCAR 1, but certainly there are issues on MiCAR 2 that the European agencies will be interested in looking at. For example, the unbacked crypto assets, Bitcoin, and how that treatment would be. They will also be focused more on the interconnectedness between the traditional financial markets as well with the crypto assets there, and how to handle that regulatory interaction there. So these are just some of the highlights to give you food for thought to plan ahead with your risk-based compliance model. I think one very important issue is I'll try to consolidate my last 2 points here in one last note here, is that MiCAR having the text is very important as a first step. But what is actually important is for the actual supervision that happens on that will happen going forward, because a lot of those implementation of those rules will be down to national competent authorities on how they implement it. And that will be a key into how to see whether there is consistencies in terms of in terms of supervision, and also in terms of implementation of the requirements. Undoubtedly, we will likely in the first 2 years of the MiCAR implementation, we'll see some of the jurisdictions will have take a more stricter approach in interpreting some of the rules, but for others, they might be more relaxed given on the risk profile. So that will be very crucial in the first 2 years in understanding the sort of the enforcement advice or enforcement activities that's being conducted by the supervisors. So MiCAR is here, has been confirmed, sort of, but we will see that there are still a lot of moving parts in this space. And on that note, I will close my presentation here, and hopefully Marko think that I didn't run out too much of time. Thank you.
I think we could carry on for a couple of hours, knowing we have a sad case story regarding the crowdfunding regulation that was accepted by the market participants as being utterly outdated already when it was adopted, and then secondly, ESAs are unable to provide level 2 input, meaning that there's always the risk that actually we are in the same situation, especially with the issue that still to some extent this is a revolution in terms of rules and in terms of what is regulated as well. Only one question. Okay. In the same theme of issues that I discussed with Joosep, where are we compared to other parts of the world? Knowing where we are in Europe, any comments, any initiatives, or kind of where do you put us on the picture?
Yeah, so I would say that there's in the crypto regulatory space in Europe, we are moving quite fast ahead. You will see that only this past Monday, South Korea has said that they are looking into doing stablecoin regulation. The US is also catching up on the stablecoin regulation in this space. And UK supposedly will also give a public consultation in stablecoin regulation model. So you will see that in terms of regulatory development, especially on stablecoins, you're very far ahead on this. And if you are interested enough, and you will be very much would like to go to the website of the Financial Stability Board, the FSB, they also issued a very detailed consultation paper on how to treat global stablecoin regulatory models. They have specific requirements there. The consultation should be closing next week. So in the next few months, we'll also see at the international level what the FSB is recommending all the different countries to do that. And that's on stable coins. But if we are looking at market and abuse, manipulation issues, IOSCO is also looking into they have two parallel working groups. Focus on crypto assets as well as already on decentralized finance, on what are the risks and what is the supervisory approach on treating these issues from a prevention of market abuse perspective. So you will see that in current MiCAR text, there is treatment on market abuse there, and how to on obligations on how to prevent insider tradings and all that, which is actually quite similar to what the TradFi is being asked to do at the moment to comply with the moment. But it would be very interesting to see these developments by IOSCO, which they will publish the report in the third quarter of next year on recommending policy proposals on this aspect. So that would actually also impact on the MiCAR 2 development, because if they have more stringent rules and additional rules that is aligning more closer with the traditional financial market, then there will be the impetus and there will be the incentive within the European policymakers to align more closely to that. I think going back to the one last point here is that regulatory harmonization is very difficult to achieve here in the crypto space. You will see that the same thing that Joosep mentioned just now on the TFR. A lot of the crypto as a service provider right now, they are very non-European based at the moment. They actually follow a lot of the rules in APAC region and in the US. Then how we can get them prepared to follow and comply with the European jurisdiction as well as the international obligations together and operate their business, I think that will be key.
Yeah, totally agree. All right, I think we are elegantly over the anticipated timeline as well. So I would like to take at least 7 or 8 questions, and as I said, we can carry on for hours. But then we are only at the beginning. Thank you, everyone. It seems to be that we have a fair understanding what will happen in the future. We should be well prepared. There are many obstacles and many questions. As I said, we need to get the text adopted plus level 2 input at some point as well. But nevertheless, I think this will be interesting times. This would be good times for the market, the Estonian market and the EU market as well. We'll see what will happen actually in terms of who will, whether there will be a regulatory race as well, which we kind of hinted. Obviously, we don't want to touch upon this before we have the final text, but then we'll see who will try to build up a race car and take part in the race. It might well be that in Estonia, we don't actually want to build up the race car because we already have been in the race too much as well. We'll see. Thank you, Janet. Thank you, Joosep. Thank you, Anneli. And last but not least, Siim as well. Thank you for the inputs. And good luck to everyone and see you around. All right.
Yeah, thanks for having us.
Thank you.
Have a good day.
Thank you. Thank you.
Bye.